Ladies and gentlemen, good day and welcome to the Q3FY22 Earnings Conference call of Navkar Corporation, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital. Thank you, and over to you, sir.
Good afternoon and very warm welcome to everyone. Thank you for being on the call of Navkar Corporation Limited. From the management, we are happy to have with us here today Mr. Anish Maheshwari, Chief Financial Officer, Mr. Nitin Sharma, General Manager Finance, and Mr. Kunal. Before we start question and answer session, we'll have opening comments from the management. Now hand over the conference call to Mr. Anish Maheshwari. Over to you, sir.
Thank you, Vikram. Warm welcome to all in the conference call on the earnings of Navkar Corporation's third quarter FY 2021. Good afternoon, good morning, very warm welcome. Looking at the figures of results presented, I'd like to mention that position of current quarter is almost in the line with the preceding one. The priority of the company is improve the profitability in line with natural growth of business, volume and current units of company. The elements of the revenue of company during the quarter were as follows. Volume of the imports container handled rose by 8.1% from 26,434 TEUs to 28,583 TEUs on QOQ basis and from 30,622 TEUs on YOY basis. The same is down by 6.7%, and volume of exports container handled by again declined by 10.4% from 19,613 TEUs to 17,573 TEUs on QOQ basis and from 14,514 TEUs YOY basis. The same has increased by 21.1%. In case of CFS-PFT volumes, import handled stand at 36,951 TEUs from 29,297 TEUs on QOQ basis, which is rise by 26%, and from 29,587 TEUs on YOY basis. The same is now up by 24.9%, and volume of exports container handled increases by 50% from 18,980 TEUs to 28,469 TEUs on QOQ basis and from 24,412 TEUs on YOY basis. The same is now increased by 16.6%. Now train handled stands at similar level of 216 last quarter to 256 at CFS-PFT and from 720 to 711 to ICD-PFT, which is also in same line on QOQ basis. Comparing the same with YOY basis, the trains handled were 270 in CFS-PFT and 717 in ICD-PFT, which is overall by 2.03%. Exim turnover rose from 146.42 crores to 159.15 crores on QOQ basis. It is led by 8.7% increment. And this is a rise of 9.9% from that in the same quarter of last year, 144.77 crores. Domestic turnover stands 55.1 in comparison to rupees 61.47 crores on QOQ basis, and the same was 42.07 crores in YOY basis. Now I just wanted to come along with the profit figures for quarter 3 FY 2021. Operating profits of current quarter stands at 77.43 crores in comparison to 71.90 crores in preceding one, which saw a hike by 7.7%. EBITDA margins of current quarter stands at 49.33 crores in comparison of 47.19 crores in preceding one, which shows a rise of 4.5%. The rise in EBITDA margins belongs to the reason such marginal hike in turnover of the company, 215.49 crores in last quarter to 218.5 in current quarter. The depreciation cost of company increased by 11 lakh in current quarter as compared to last in the last one. The reason of same is increased depreciation cost due to the capitalization of assets in last quarter as well as assets adding during the quarter. Profit before the tax current quarter at 21.12 crores in comparison to 18.85 crores on QOQ basis and net of 18.05 crores in YOY basis. Profit after tax company stands at 12.6163 crores in comparison to 11.6 crores on QOQ basis at 13.9 crores on YOY basis. The increase pertaining even the other expenses rose by 20% on account of sales and promotions on occasion Diwali and bonus elements in the manpower of securities expenses. Coming to area of new projects development, continuing at Morbi, the company have received a letter of intent Ministry of Finance in 26 October 2021 for setting up an ICD and principal approval for construction of private freight terminal railway siding at Manaba, Malia, Morbi districts, Gujarat. For this purpose, the company has acquired land base at locations of further. The construction of facility has been begun and the foundation work is in progress after getting order to utilize the land for non-agricultural use. The management in contemplating to be complete the terms of LOI by the timeline and make the ICD operation well before the time. The purpose of the new ICD is to have better connectivity in network to serve the customers better in domestic market also. Management in the opinion that we have facility will be acquire new customers and increase the profitability of the company. We also just wanted to add over here, in Morbi, our 30% foundation works have already been completed and our interactions with the customers fraternity is already started over there too. And we got good attractions and interactions with sessions with the customers too. After analysis of all above points, I hereby like to state that the company's performance is in the growth of revenue was almost at par with slight decline and the same is having corresponding impact on the profitability. Looking at this, company hopes to sustain the operations and profitability in coming 2 quarters, beyond which the profitability is improved and profit is there. Now will be open the floor for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi sir, good morning. So my first question is, if you see the realizations have fallen this quarter, so is there any particular reason for that? And what would be our revenue guidance for FY23?
So basically, I had already been told in the call, there were operating costs which was slightly higher than the past quarters. And operating costs, I can say that cost for the maintaining the truck drivers and other people will have to be incentivized them till now. So that is the major reason. Otherwise, if you see our expense is in line with the past quarters.
Okay, and what would be our revenue guidance for FY23?
So basically, in revenue guidance, I can say that Mumbai CFS in past 3-4 quarters, I'm speaking on the same line. Mumbai CFS is not giving any kind of organic growth, and we are not hoping even to our CFS. So now we are into the development of other line of business in logistics sector itself. Like we are more focusing on the domestic side, and we are trying to driven some other models in the domestic markets too. Other than that, we are hoping that by next 2 or 3 quarters, probably by December, we will try to start operations full-fledged over there in the Saurashtra region. So after that, I can say the growth for the company for next couple of quarters will be slightly in the upper side. But after the Saurashtra ICD, which we have already been, commencement is already been, infrastructure development has already been in place over there. So we are hoping that in second or third quarter, when we started operations there, then we'll be getting actual benefit of our ICT over there with the connections of our cross-selling for Bombay, Vapi and Saurashtra region. So till that, we just wanted to be try to maintain this current EXIM business, and we are just trying to make sure that in domestic side we were just trying to add more and more customers now, whoever is there in the north side and the Gujarat region. So with that, we are hoping that our revenue growth, particularly if you say, will be in a higher side from current.
Okay, got it. So my second question is now from here, how and why our margins are going to improve from here now? Okay, like what will be the key driver from here?
So basically, margins, if you'll ask me, currently our EBITDA margin, if you'll see, quarter-on-quarter in the improvement mode. Operating profits are also in the improvement mode. So once we had already been ordered 4 trains, which will be, I think so, come to us by April or May. So once that 4 trains will be added in our fleet, then our operating cost also getting down, because now we are using the leased trains and efficiency are getting down. So from here to, if you ask me for a couple of quarters or for next year, that will be the improvement side.
Okay, so you are saying because you will be adding more trains in May, you said, right?
Basically what happens today, if you ask me today, we are using 14 trains. Out of that, 2 owned by the company and 12 we have already been on a leave. Or more business which we are getting from the ICD as well as the domestic market, we use our train facility, correct? We are using our PFT, we are using our resources for the same. So in that context, if I say you, if you would like to be convert more owning trains, then my operational efficiency will be getting improved and cost will be getting down.
Okay, so those 4 trains will be owned, are you saying?
Yeah, so 2 we have owned now, and 4 we have already been ordered. Payment also been done, around 30% payment already been done. Further, I think so by April or May, that those trains will be in mode to deliver.
Okay, got it. Okay. And any indication how margins will be going up from here? Like any indication on FY23 EBITDA margins?
If you see, my historical EBITDA was in the range of 37 to 40%. In past 3-4 quarters call, I had already been told that our first target from here, now our EBITDA margin in the range of 23 to 25%. So our first target from here in couple of quarters, or I can say next 4 to 5 quarters, we just wanted to be target 30% of our EBITDA. And we are having a self-hope over there after the interactions with the customer baseline and the new propositions which we are getting to establish over there in the Saurashtra region. And ICT business, if you see, our ICT business is in a growing side and giving us a positive hope. Our first target towards the EBITDA margin, to take that EBITDA margin from here to around 30%, 32%. That is our base guideline actually.
Okay, so you're saying 30%, if I heard correctly, like 30% in 2 to 4 quarters you are saying?
Yeah, approximately 3 to 4 quarters.
Okay, so approximately in 3 to 4 quarters you are targeting a 30%, and that you are saying this is because the trains you are adding, correct?
So that will be because of mix of so many things. Now we are focusing on some more commodities, point number 1. Point number 2, the operational efficiency after new trains will be getting improved. Third one, interactions for our Saurashtra region. So in that connection, what happens in Gujarat, whenever we are going to the Saurashtra, then they same parties were having a business over there in the South Gujarat also. So with that interactions, we are getting that sense they will be in the improvement side in the next 3 or 4 quarters.
Okay, got it. No problem, sir. Thank you.
Thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sanjay Awatramani from Envision Capital. Please go ahead.
Good morning, sir. Thank you for taking my question. Sir, I just wanted a clarity. I mean, the previous participant mentioned that you mentioned that you are ordering 4 trains and 2 have already been delivered. So 2 will be additional, which you will get in April and May. Is that understanding correct?
No, sir. So right away, I have 14 trains.
Okay.
Correct. Out of that, 2 is owned by the company, which has already been under operations. Correct.
Okay.
Well, we are having on a lease model basis, and we already placed order, I think so, 6 months back to Taxmaco. So 4 trains will be added in our fleet, and the rest, the existing 4, which is on a lease basis, that will be retired.
Okay, so basically the total operations will be 14 itself.
So basically, what will be going to be happen?
Yeah.
Today there is a dependency on the lease model with the other train operators. Correct.
Okay.
Once I'll be having my own 4 trains, then if I'll be having a lease today 12, then that number will be going down by another 2, because that 4 new trains will be operated by me, and the operating entire administration of operations will be decided by the company itself. So we will be having freedom to operate in our own manner. Otherwise, we'll have to have some dependency for the lease-based trains.
Okay. I'm not planning to increase any trains above 14. I mean, the total train count will be 14, right?
Right now, not. But I can say there is a good traction in the PFT and railway side. People just wanted to shift their business from road to rail. There are so many big clients which we added in our fleet now. So looking at that, near future, I can say that 14 trains will be also less for our operations.
Okay, so as per case basis, yes. If needed, we will increase.
If required, we'll be taking annual leave. But right now, if you'll ask me, by May, we'll be having our own 6 trains.
Okay. And so do we have any capex plans in the coming near future or for next year? Any guidance if you can give?
Basically, I just wanted to give you some highlight on it.
Yeah.
Capex towards the Saurashtra is already been going on. Financial arrangements already done. Correct?
Okay.
And right now, what we did in past quarter, 1 or 2 quarters, we got some good tenants from Axis Capital and Bajaj Finance and Union Bank of India. The 10 years was almost around 10 to in between range of 10 to 14 years. Correct. So what we did, we used our cash flow for the existing repayment as well as the advance repayment of the loan. And that loan which we got new, we used for the infra for the ICD. So financial arrangements till now we are on part of the team, and we have already been approval from our board of in totality 300 crores. Out of that we are only till now only used 100 crores. So is there any further capex plan beyond the Saurashtra ICD is not there in the mind till now, but yeah, definitely Saurashtra ICD we have already been take the capex for loan facilities also.
Okay. So no plans for capex, anything over and above the Saurashtra infrastructure.
Right. So we were at that time, if you see in the last quarter, we were taking approval for 2 ICDs. One is in the Maharashtra and one is in Saurashtra. But till now we dropped the idea for Maharashtra. We are more focusing on the Saurashtra side, because when we start infra building up there, then the interactions with the customers, I think so we are more keen over there in the Saurashtra region because there is a huge demand.
Okay. And sir, I think I missed the revenue guidance part if you gave anything for FY23.
So revenue guidance, I can say guidance means there is no such organic growth in the CFS side, but we are definitely in positive side for the ICD. Till now, our revenue, if you see, for this current year is almost in the range of 700 crores. And last year, whole year, we did around 630 crores. So for 23, we are hoping that further 10 to 15% jump from the current to 2022. It will be for sure.
Okay, so 10 to 15% growth from 700 crore, right? This is what you are expecting.
The reason behind that is, because the core reason behind that is, this 1 or 2 quarters we'll see, due to the shipping freight and all, there were so many operations stuck. So the impact was more or less in last quarter, and it will more be in the same quarter. But from April onwards, that these whole issues will be getting down. So we are hoping that from here onwards, next year definitely our progress. You can see last year 630 was my turnover. This year we are already having a turnover around 700 crore. One quarter is still with me. So we will be in range of reaching some of around 900 plus crores. Correct? So
okay, for FY23, right? FY23 this will be.
So current year, if you see March 2022 number, maybe in the range of almost in the 850 to 900 crores. Correct?
Okay.
Next year, further we are having a high hope for 10% to 15% increment in the revenue side.
Okay. So just to be clear on this side, 700 crores is for full year FY22 or more than that. Is this understanding right?
Yeah, no. If you see in last 3 quarters, my total turnover is in the range of, we have already been 653.
Okay, 653 is already done, yeah.
So if we'll add 200 more for the current quarter, so it will be in the range of 850 crores.
That's right, sir.
Yeah. So from further, I am assuming that if my Saurashtra ICD will be up and running by the 3rd quarter of this year.
Okay.
Because in past what we will do, what we did in past, wherever we make the ICD or CFS, we just took the notification for the area which we developed as soon as possible. Correct? So there is a development of around 75 acres of land, out of which if I'll be having a development, I did the development of 20 acres, then we will go for the notification. So that process we will start by 2nd quarter of this year, next year, and by 3rd quarter we will be start, commencement of operations. Correct? So with that hope, if I'll be at 10% more from the Saurashtra with the existing one, correct? So we'll be getting additional business from Saurashtra.
Okay.
If I'll be assuming if there is no organic growth from the Vapi or the Mumbai CFS, correct? Then also I'll be at 10% more minimum. This is our high hopes from the existing marketing team. Getting sense from them too.
Yes, sir. So I would say if we are expecting around 800 to 850 crores this year for FY22, we'll add 10 to 15% more for next year.
So next year we'll be in the range of 925 to 950 crores. That is our target for it.
Okay, sir. Got it, sir. This is all from my side, and thank you for this clarity, and good luck for your future endeavors, sir. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, good morning, sir. My first question is on your CapEx. So, sir, what is the CapEx expected for FY22 and then for FY23?
So FY22, if you ask me, there is no CapEx. We are having a fresh new CapEx for Morbi ICD only. Correct? So till now, we had already been spent over there almost in the range of 65 crores to 70 crores. Further, we are targeting that next year 100 crore rupees will be added. But meanwhile, my 31st March 2022 loan book was in the range of 495 crores. Correct? Which is now 530 crores till now. Out of which we have a cash in book almost in the range of 35-36 crores. So for this whole year, whatever CapEx we did, we are in the same range which was in the 31st March of 2021. Correct? So now onwards, there may be a further CapEx of hardly value of 130 crores.
Okay, so this year CapEx would be 70 crores, which is done. So 100 crores this year, next year also 100 crores. This is the right estimate?
Yeah, exactly.
Okay. And sir,
but you will see, we are still having an advance EMI payment of 83 crores. So eventually, if you'll ask me, in totality, if I have a loan book of 530 minus 36, so 495 crores, plus I will add further 130 crores. It will be in the range of 625 crores, out of which 85 is already advance payment to the bank. So almost debt level will be in the range of 540 to 550 crores.
Okay. And what is the total project capex which is related to Morbi expansion?
So total capex for Morbi approximately, if I will be including the land, in the range of 180 to 200 crores.
180 to 200 crores. So when we say that we are looking to complete this expansion by 3Q24, 23, FY23, so the whole of this 200 crore will be incurred, or some of it will go to like FY24 also?
Some of will be definitely going further next year too, because railway PFT and the railway siding operations will be, we are targeting start by third quarter of this year, next year. Once the railway PFT will be getting started, then we will be getting another notification further, which were the further development. So it will be take another 2 or 3 quarters. So that entire planning of 130 crores new capex will take from February 2022 to another 1.5 years in totality. So it may be in the range of June 2023, I can say.
Okay. And aren't we targeting very aggressive timelines? Because I think this Vapi ICD also was aggressively targeted in terms of timelines, and it got also significantly delayed, quarter after quarter. So we only recently started working on this project, and we are now targeting CQ FY22 or 23.
Vapi operations was started very soon. That's why I'm telling you, we are targeting the day for the starting the operation. Correct. Vapi delay was in the railway siding side due to the DFCC was the major hitch, because they were also not having a plan to DFCC corridors from where the railway lines will be getting down, correct, or laid down. So that was the reason we further delayed for 3 or 4 quarters. But here, if I'd like to start operations via my road operations, Vapi also we started road operations also before we are commencing the railway, correct. Railway was delayed due to certain reasons, but I can say guideline towards, that's why I'm giving the conservative guideline of 10% increment on the business in 4 months, correct. So that may be possibilities of further delay in the railway sidings too, but for the operation starting of the operations over there in the ICD Manaba will not be a hit, because I have 9 months from here to take the approval from the customs for notification. So once I will be ready with 20 to 25 acres of the area, we will go for the notification, which we did in the past also. So there is a long past history. Wherever we have a short area, the minimum requirement is 10 acres, correct. About 10 acres, I can take go for the notification. So once notifications will be done, then I can start the operations.
Okay. Okay, sir. And
you are very well correct. I really connect with your words also, because our railway siding was getting almost 4 to 5 quarters delay.
Okay.
They may also possibly be, but I can say there were 2 different things. If I just wanted to add over here, in ICD Vapi, we have 2 major hitches. One was the feeder line from my premise to the next railway station, correct. So it was take further delay, point number 1, due to the DFCC map. In Manaba, where we are making new ICD, feeder line is hardly on a 50 meters distance, which is same like Bombay CMS. So we are hoping that, we are assuming that there will not be an issue for the railway siding also. But yeah, I have a past history of delay in railway siding. I have to be agree with you.
Sure, sir. And sir, on volume growth, this particular quarter, we see some difference in mix, like our Mumbai volumes did very well, while Vapi was sort of stagnant quarter on quarter. Any specific reasons there?
So Mumbai was, this quarter, the volumes were a little bit on the higher side, and which we told you in past also, in CFS, there may be not organic growth, but there may be, plus minus. Sometimes it will be giving me an addition of 5 to 10%, sometimes it will be on the same range. So that is just because of port activity. There is no such other reasons, or there is no such other reasons like we are added some other clients or not.
Okay, but there is a sharp. I think this is first time we have sort of seen some kind of reversal in Panvel. Panvel volume.
After a long time, you are correct. After a long time, there is a positive growth in a CSS exim business, and reason behind that is again our expertise in exports. If you see, my export operations increased by 50% from QOQ basis. Correct. So practically the exports which was not done in past 3 or 2 quarters due to the shipping freight and so many reasons, delay in vessels, and then there's sort of so many reasons which was in this quarter and which will remain same for next couple of quarters.
Okay, and one last question on your other expense. You mentioned something on why it has increased. Can you repeat that number?
So basically, Pratik, what happens, if you see my numbers, my cost to indirect expense, which will be in the admin side, where there were 2 or 3 components. Last quarter was the bonus and Diwali quarters. So in this quarter, there may certain expense towards the implementation side and towards the employment cost. Point number 1. Point number 2, to retain the existing laborers and truck drivers, will have to give them incentives, which is not contributed to direct expense, which will be a sort of a ex-gratia kind of a thing. So that was there. Due to that, our expenses were getting upper side.
Sure, sir. Thanks and all the best.
Thank you. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yes, sir. Regarding the volume from this new ICD, particularly this Morbi, what kind of volume we can do or expect in initially 1 or 2 years? And as you said that we'll start operation with the road side first, and once we ready with the PFT, we'll move by the rail. So one I'm looking is that volume guidance outlook for this Morbi ICD, and what would be the cost difference for road versus rail for Morbi to port?
So Vikramji, this is very early to comment on it, because there is the volume over the exim target of C. We have some data. I will share you with you separately, because we have some kind of a data which we are getting since there is a volume in that region almost in the range of 10 lakh containers per annum, which is more or less from the Hazira, Pipavav and Mundra port. Some kind of a cargo which is coming from the JNPT port also. So market is there is no problem. But if you see my ICD operations over in Vapi, when we started, first year we did 17,000 containers in 4 months. So almost in the range of 3,000 to 4,000 containers we were targeting over there. Target was 10,000 containers, which we reached in second year itself. So second year we did almost in the range of full operational year with railway was the year where we have a volume of almost 1.5 lakh TEUs in a very first year. So it is all depends the growth of their cargo and the operational efficiency which will provide to their customers and the cost benefits which will have to be passed on to the customer. Based on that, we will be arrive the same number. So if you ask me today, this is really very early to comment on it. But yeah, I can say you that there is really a good traction from the customer side. People are really want ICD over there. People are really want domestic market operations to some sort of a railway siding over there. So I will share the letter from which was issued by the Rajkot and the Saurashtra region ICC, that Industrial Commerce of Chambers. They were recommended to the railway and the government of India ICD to that for IMC that there is a need of that kind of ICD for the domestic as well as a PFT operation. So I can say there are so many big business houses they need, because Morbi is a tile hub, correct? And there is no these kind of a rail facility. So and we go there and ask to the people, they also give us the sense, because nobody having a thought of that. They may be operational efficiency by the railway, because The problem is what? In that particular region, there is no raw material kind of a thing they were having over there. So they will have to be dependency for the which is for the tiles and all, which comes from the north, and the coal and other things which they required for the making those kind of ceramics and all, they took from the south side. So there is a need which we have already been evaluated, and in LOI if you see, they definitely looking at that, there is a need. So till now we have a sense there is a market, there is a business, our marketing team is regularly going there, they are getting good sense. So we are targeting first year will be in the same line of business where we did in the past Vapi. At least 2,000 to 3,000 containers in per month we would like to be delivered out there.
Understood. And our capacity, if I'm not wrong, is around 2 lakh TEU.
Yes, sir. 2 lakh TEU.
Right. But I think given the tile and all that, railway will be much more advantage as and when it is ready.
Definitely.
Right. Yeah, I think that was very helpful. Yeah. Thank you, sir, and wish you all the best for that.
Thank you.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sudarshan, an individual investor. Please go ahead.
Hello. Thank you, sir, for taking my question. This is regarding the MAT credit. So currently, the total tax is about 40%. So we are in the 6th year. Either we go for the MAT credit or we going for the tax model without any rebates or kind of thing. Right? So in that case, what would be the net tax percentage? It will be reduced from 40 to 30 significantly, basically, if we apply the MAT credit.
So basically, in last quarter also we told the same thing. It will be we will be decide based on this quarter's numbers. So if fourth quarter number within the same line, we'll have to evaluate. We'll go for the MAT credit or not. So I will definitely give you the guideline in the next quarter. We'll definitely getting the same. So once the fourth quarter number will be arrived, then after we will decide that we will go for MAT credit this year or not.
But are we not in the 60 years? So for 15 years, only 10 consecutive years only we need to apply. So this is the year where we need to make the decision. Either we go for MAT credit or we'll go for some other model, right? So this year we need to take that. You will be taking that decision, correct?
Yeah, definitely. But that's why I'm telling you. After fourth quarter number, we will decide that either we'll have to go for MAT this year or we'll have to apply for next year.
Okay. In either way, the tax rate would be reduced from 40% to whatever may be the number, right?
Yes.
Okay. Thank you.
Thank you. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. Just wanted to clarify on margins. So, would it be fair to say, that now going ahead in future quarters, our EBITDA margin should be trending up, and our near term we should be going towards 26% kind of EBITDA margin?
So basically, our base target, if you see from last 2 or 3 quarters, I'm saying the same thing. Our first target is 30%, about 30% each of the. So that may definitely take some time, but our target is 30%. So it might possible it will be in the range of 25, 26, 27% for a couple of quarters.
Okay, got it. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. As there are no further questions, I now hand the conference over to the management for their closing comments. Over to you.
So Thank you so much, everyone on the call. Thank you so much to the PhillipCapital, and all the best to everyone.
Thank you. Ladies and gentlemen, on behalf of PhillipCapital India Private Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.